Okay, everyone, this is video 12 in the Dow Gold Ratio series. I've done 11 other videos. This is this one goes back to video 1 because video 1 was a 2019 end of year update, and this is a 2020 end of year update. And then I'm going to give you a little outlook for 2021. I think the theory still stands up so far, anyway. So let's just jump right into it. Quick review. This is the schematic I come up with from looking at the actual chart. It's real simplified, and it just has in blue is the Dow Gold ratio. And as when it hits a turning point, I have these data points put in because I'm interested in those data points when it turns. And if you look back at any of the other videos, the starting point for me was when I noticed that it had hit this line that was formed by this point, and it turned. Then I switched my focus from being in traditional type stocks like the Dow, like you'd find in the Dow or the Nasdaq or S&P, which is what I would have wanted to be in this segment. And then in my particular case, I got mostly into mining stocks, but the idea would be to switch into gold or gold mining when this thing's going down. So that's what this says right here. When it's going up, you want to be in stocks. When it's going down, you want to be in gold or gold mining. This is just a little calculation. Well, that at the last 11 times it's done what we thought it was going to do, and it's even made this turn and is going down as we expected. So the risk of it not, let's see, how do I want to word this? The risk of it not going down this way and continuing like this is 100 minus 92, or 8%. So in other words, there's a 92% chance that it's going to continue. At least 92%, because it's already turned and we've got confirmation, and so forth. So this is the actual chart, what the actual chart looks like. And let's see if I can make that a little bigger. I got room on the video screen. And just as a quick review, let me get some drawing tools up here. Let's see, draw. Where? Well, I'm embarrassed there. Let's see. Draw. What happened to my draw? Oh, here. Huh. Do I need to start this over? Add pins? Where are my pins at? Pin. There they are. Okay. We'll just keep going. Anyway, log scale is off, and that's not ideal because, as you can see, this is 1929. This is 1966 from the schematic, and this is 1999. So those 2 points, when the log scale is off, don't predict that point very well. It gets it a little early, so if you wanted an early warning, I guess you could leave the log scale off. But with the log scale on, that's what you want. And so that and that predict that. And I may not be able to draw this perfectly, but that and that predict that. Excel may have a straight line. I just don't know where it is. I'm just trying to eyeball it. That point and that point, predict that point. And this point and this point. We now have 2 points and we're waiting for confirmation. Here was September 2018, end of month, and so what I'm saying is, the pattern's going to continue, and it's going down there, and that's approximately Dow Gold equal to 1. So that's where this comes from right here. And those specific numbers, those are fairly specific. And what I'm really predicting is that this thing is going to 1, and I just happen to come up with some numbers there, which I think I'm still sticking with those numbers. A lot of people are now saying gold's going to go higher. So it's a Dow Gold ratio. So you could have, the Dow hit 20,000, drop to 20,000, and gold go up to 20,000, and you'd still have 1. So I don't know. That's just my best stab at it. Anyway, it's more than it is now, and so I think the reward is much higher than. What are the chances that 30,000 is going to go to 60,000 and you'll double your money? But you can triple or quadruple your money when gold at 1900 it goes up to something like that. So I'll erase that. And let's continue on. 2019, I just carried this over because I've already done this in the first video. So go watch the first video. The only thing I'll point out here is I did have, I went through this and I went through it, I checked and found a couple of numbers. These numbers, I had transposed those numbers. Here's a screenshot from the first video. So notice that the 2647 and the 5139 were transposed, and that led to, that number not being as big as that number, but still ridiculously big for switching. Here I'm switching Dow Gold, Dow Gold, Dow Gold, and I end up with 3.6 billion, which is still just off the charts compared to just staying all in the Dow or being all in gold. Okay, so now in 2020, here's the update. So the only thing that's different is those numbers right there. And if you stayed in all gold, gold is 98 times better than the dollar. And I think that seems reasonable, over this time period till today. So over 100 years, gold has lost, I think that would mean it's lost about 98% of its value. No, I don't. Maybe that's not right. I'm thinking of something else. But anyway, it's 98 times better than the dollar. So whatever it's lost over that time period, you can go look that up yourself. And if you're all in the Dow over this particular time period, you ended up with 556. And now the Dow, at least as of today, has gone up since my schematic recommended I switch out of the Dow. But it just hasn't performed as well. Here's the average over those years, 7% per year, and gold is doing better as we would expect during this time period. And if you switch, and then you end up with 4.5 billion. So it's better than it was in 2019, which was 3.6 billion, as expected, because the Dow gold ratio has been dropping as we expect. It's at 16.13 and it was at 18.74. And again, I'm speculating that it's going to 1. So it's just getting started. So that's good news if you haven't got in yet, I suppose, and you're interested in this kind of thing. This is not investment advice, just some low-hanging fruit that I see. And I said I was going to do an outlook. So here's if I go back to here to 2020 and I look at these last few. Let's see. Let me just kind of highlight those last few right there. And I add a mining stock, which is Huey, to the equation. And let's just look at what happens, from 1999 to 2020. That's what I'm doing over here. And let me scroll up to the top here. And so if you recall, from here, there's a gold segment and a stock segment and a gold segment. And let's just go ahead and highlight that over here to underscore that. If you recall, as it says here, up is you want to be in stocks or the Dow actually, or S&P 500 or NASDAQ, and when it's going down, you want to be in gold or gold mining stocks. And what is represented by what I've added here is the Huey, and that's what I'm using to be a proxy for the gold mining stocks. And so here's the current values of the Huey, and we've got a down segment where it's advantageous to be in gold, up segment, that would be our Dow segment, and then another down partial. This is 2024 is in the future. So that's what we're looking at here on this spreadsheet, and just kind of looking at the rewards for the different rewards for doing different actions here. If we just stay in gold the whole way, we end up with, and also I assumed, if you like looking at real numbers, I've got real numbers there. So if you started with 100,000, you end up with 735,000, and it's a 73% gain just to stay all in gold. And well, all in Dow. This time the Dow underperforms gold because it's not surprising. There's two. We would prefer to be in gold in these two segments, and then here we would prefer to be in the Dow. So there's only one stock segment in this time period. That didn't do so well. And then the Huey is a mining stock, so it does even better, despite the fact that it's got such a negative one right here. And notice this right here. Notice how good this is. Well, it's showing up a little better over here, and on an annual basis, because we're only 2.3 years in, and this thing could go for another 4 years like this. So maybe not. That's my best guess. Is another 4 years. So that is just a guess, but it's worth taking a stab at. Dates can be very elusive, predicting when something's going to happen. The most reliable thing is predicting that the Dow gold ratio is going to 1, and then rather than predicting specific dates as to when and so forth. Okay, so so I looked at the case where you just stick with one, and then we started switching, and of course that performs. It doesn't get better than that one, but it's reliable. This is the way you should do it: gold, Dow, gold, and then not surprisingly, the Huey. This one's going to be the winner. Uh, is 133.6%, and that's annual. Amazing, it's over the whole 21 years, it's 1,045%. So that means you're doubling your money, more than doubling your money every year. And 100,000 goes to 1.1 million. Put your own number there. And then what I thought I would do here is look at because in the title I said, I'm looking back mostly. Uh, we're end of year update, but outlook for 2021, and so I want to look back and point out something that happened in 2008. So in 2008, we had a financial crisis, and this is something that I can't predict right here, is that move right there. And the financial crisis is called quote unquote deflationary. And what that means is that the dollar temporarily, temporarily shoots up in value. And I don't know how to predict that, but that would have been shocking right there, as all financial crises are. But my argument is that back here, this is a lot different. So we've had another financial crisis, and this one's probably over a period of 7 or 8 months. This one was less than 1 month right here. Excuse me, let me see if I can draw that a little better. But you can see it right there. That happened in March, and that is another, and we call it the financial crisis. What it is the dollar. It's a credit crunch, is one way of putting it, and it's the dollar shooting up in value because there's so much demand on the dollar. Well, we know, when we go back to 2020, and if we go back up here, we know that over the long haul, the dollar loses value. There's no question about that. Gold is 98 times better than the dollar. But there are these weird times when that I can't predict myself, that this methodology that I'm calling the Dow Gold ratio theory, it doesn't predict it. All the Dow Gold ratio says is just to be in mining from there to there, or gold from there to there. It doesn't catch this little counter trend. And likewise, it says, back in 2018, that's the time to get in mining, and it doesn't predict this little downturn there. But my argument is that people are a little bit too possibly over concerned about this drop, because if you look at this, this is the highest mining had ever been up to that point, and here this mining is not anywhere near the highest it's ever been. So there's not much room for it to drop like there was here. And so if I go back and let's do a little calculation just to illustrate that. So that right there is about 515 for the Huey, which represents mining. So I go back and I look over at gold, which I got over here, and at that time gold was about $914 an ounce. So now I can do a relative evaluation of what gold is now versus what it was then. Well, right now, the Huey is only at 300, and yet gold is 1899. So something's out of whack here. And so let's go ahead and figure out what that is. So if I take this number and divide by this number, I get probably something like 0.5. Yeah, 0.5. So what could the Huey be? So the Huey is 0.5 of not here. The Huey is 0.56 times 914 is equal to that. So what would the Huey be here? I'll ask myself the question, what would the Huey be if the same valuation metric were to take place? And I would say that would be, it would be 0.536 times 0.563 rather, times this number is what the Huey could be. So the Huey is that is more than let's see, what is that? So the Huey is undervalued, in other words, about 3.5 times. So is there something else? Why can't I delete that? That's weird. Okay. So is there something else that's that is there? Why is the Huey not much higher than that point? Well, it could be that the people are remembering this and they're just afraid to get in. It could be that it's just been overlooked. But to me, this has got a lot of potential upside to it. Obviously, it could be going way up there. So that's my outlook. Is that not only is this continuing down, but and gold is going to continue to go up, I believe. But as long as gold goes up, this is going to it's got a lot of correction catching up to do. So I would expect mining to really take off in a big way. And that's my update for 2021. Well, for 2020 and my outlook for 2021, rather. So thanks for watching. And if you're trading or investing, whatever it is you're doing, good luck at it. And see you on the next video.